Hello and welcome to the Money and Markets Show on NTV Uganda. We're glad you're here with us. Now, Charles, there's a very interesting case between Safaricom and Malchos. I would really love to hear your perspective.
Well, the case, Shamim, is quite interesting. It's about copyright infringement. Of course, Malchos feels that Safaricom infringed on its copyright when it actually went ahead and streamed live some of the sports games without permission from Malchos. Now, it's quite interesting because it's coming at a time when there's a bit of suspicion between television companies and telcos over who actually is going to be the master of content, where we're headed. Because this guy is on the platform. But we'll be delving into that and more in our subsequent shows. It is, once again, Man and Markets.
Now, we're soon moving into a new financial year, 2022-2023, and the government has already laid an aggressive budget.
Indeed, quite aggressive, Shamim, because we're talking about over 48 trillion shillings. Now, what is quite interesting here is the tough balance that the taxman and, of course, Minister of Finance have to walk in order to create a balance between protecting business, but at the same time realizing that target, of course, for supporting government expenditure.
Use appropriate fiscal and monetary policies. I think I've gone through that in order to mitigate these adverse effects. It's a dicey way in which to deal with the things, but we have to do it. And hope that maybe 2 or 3 months down the road, I don't want to speculate, the new equilibrium, which is not as high as what it is now, will emerge from the domestic market and the world economy as a whole. Because we do not have a control over external factors to this economy. And I think that's what I want the message to go through our industry players in the financial markets, the industry players, manufacturing, the industrial players in services industry. We're not helpless, but any attempt to try to deal with external shock domestically, you'll be committing suicide in terms of economic management, because no sooner you deplete your reserves and the prices continue and you don't have a fallback position, then you have strikes. Now this time it will be a legitimate strikes because you're managing the economy. The current strikes are not necessary. That's what I still want to maintain. And if I had my way to advise those who are striking on prices, is that please, that energy should be spent on going to dig cassava and other items in the villages. We are going to continue enhancing investment in infrastructure to facilitate the processing of what we have under the PDM model and also other economic activities. And we shall be able to emphasize in implementing the parish model, value addition and access to markets domestically and regionally. That's where the source of jobs will come from. Because direct jobs in agriculture will come on board. I know agriculture in advanced economies is a small part of the economy, but you need to start from there for those of us who have comparative advantage in agriculture, and then grow as you industrialize to higher levels of value addition in these very agricultural products, and then allow the farms to grow. But in our structure of the economy, it's better to start from where we are starting from, mass action on transforming the economy from grassroots. Direct employment comes there. As you add value, direct employment. As you innovate, you add more jobs. As you roll it out, jobs come on board. So all the economies opened almost at the same time. The production had gone down. The supply chains had been disrupted. And now, what do? You have to deal with the situation of shortages of the supply of these cooking things for cooking oil, things for manufacturing soap, the fuel itself, and so on and so forth. You don't have control over that. Therefore, what do you do as a small economy? As a small economy, we thought, on the basis of prudent macroeconomic management, that number one, you don't introduce taxes, new taxes into your system. And the minister pronounced that very well. And instead, what you do, you put some more money for URA to expand the IT systems, and that alone is a source of money that we think we shall collect from URA from 20 to 23 trillion next financial year, which is going to finance 59% of our budget, is going to come from those efficiency measures. 2, we are going to maintain market-based determination of prices. It's going to be painful for a short while, but we think if we deal with aspects of food production domestically and also surplus for export and for the market, we think the index of inflation attributed to food volatility or shortages is going to slightly dampen the inflation tendencies now. Then we remain to deal with the interest rates and exchange rate that's induced by external factors. I said also that to mitigate the crisis is really, let's get down to produce, especially food. Prices can increase, but let's have food to eat, but also excess for the market so that you can get money to now buy expensive liters of fuel. Then you drive 1 kilometer only and then see what you can, how far you can go. The other challenge is the depreciating shilling. As I told you, the increases in interest rates out there are going to attract capital away from our market into the other markets for them to deal with their inflation. And that puts pressure on us. We shall always be helping Bank of Uganda to be able to sustain at least the level of reserves, which is a decent 4.5 months, which is in excess of $4.6 billion continuously in the course of the financial year. And I think we shall achieve that.
Now, ever since Kong made a decision to join the East African Community, there's been a lot of excitement about the huge market potential, Shamim, that this huge country presents. But we have to overcome some challenges to get there.
Of course, and understanding that Congo is a French-speaking country officially, and of course Uganda is an English-speaking country.
Yeah.
So how do we navigate the barriers of communication? But also looking into the idea of infrastructure. How do we move our goods from Uganda into Congo?
On the export production side, government is looking at incentivizing exporters to fill the huge import and export imbalance where the country today imports far more than it exports, with a deficit running in hundreds of billions.
The truth is that for our country to get to the next level, we must be able to export. And so in government's wisdom, it established Uganda Free Zones Authority as an enabler for manufacturing processing for export. So Uganda, the free zones in themselves are enclaves, gazetted areas where you can manufacture, process for export. And in so doing, government provides special tax incentives for an exporter that will manufacture, add value, and export over 80% of their produce. The government was aware of the fact that we may not be able to put up the vast, huge expanses of free zones like there is in many countries. It opened it up to even single factories. So single factories can also get a free zones license.
At the moment, the country has about 30 free zones spread across different regions of the country and open to both private and public sector institutions. So as Uganda seeks to bolster economic activity, more so after the 2 country lockdowns as a COVID control measure, renewed effort is being invested in boosting production. The question, however, is whether the local private sector is in the right place or position to seize the opportunities presented. As Uganda eyes the huge export market offered by DRC, value-added agricultural products are being pinpointed as the low-hanging fruit that Uganda can tap into.
Now what you see there is shows that DRC just last year alone, regardless of COVID, imported processed foods was $766 million US. Whatever figure you see there, add 3 zeros and add the word US dollar to it. You remember the commissioner was telling us, even if we decided to put everything into DRC, we can never satisfy. The market is insatiable.
Kinshasa, as the capital city, is 5 times the population of Kampala. We are saying that that should be the good starting point. 20 million vis-a-vis Kampala of about 4 or 5 million, so that's already a huge market.
The key question being asked today is the level of preparedness of the Ugandan business community to seize this opportunity, but most importantly, what government is doing to promote exports.
Uganda Export Promotion Board is signing an MOU with ANAPEX. ANAPEX is DR Congo's Export Promotion Authority. We have already started the MOU. We are already looking at the draft both English and French, and the Solicitor General will advise us.
With a poorly developed infrastructure, some members of the business community still worry about the delivering of Ugandan goods to Congo.
Airlines will be a game changer, and we have already signed an MOU with Uganda Airlines, and we are going to discuss your concerns. Even when we went to DR Congo, for example, we found that Uganda Airlines was going to Kinshasa, but not to Goma and Lubumbashi, some of also the big destinations for Uganda. We were excited to be told that already Uganda Airlines has already been allowed landing rights to Lubumbashi and Goma. I think we should even clap for the efforts of government, because you can't get landing rights without negotiating with the government, but also the brotherhood and spirit of brother and sisterhood that the DR people gave us on expediting our landing rights.